Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back to your daily crypto news and analysis. And today we are going to be talking about the vast majority of crypto and finance. With that being said, I hope that you are all having a beautiful day or a beautiful night, wherever you guys are out there in the world. So, a lot has been happening around this market, from major financial events, ETF approvals, things like that. We're going to go in depth on a lot of it, really kind of address where we are at right now in this market, what we need to be watching for, especially for us to go higher in the short term, and what to watch for in case we do go lower. Now, Fear and Greed Index still pretty neutral at around like roughly 58 if you do follow that. Overall, Bitcoin still trading at about roughly almost 64K. Most of the market, nothing too crazy in terms of green today. Most of the market has been pretty just sideways in terms of momentum. Even on the top 500, again, there's not a ton of gains across the board. There's always going to be some illiquid projects moving, but outside of like some of these top ones up here, and again, this is why I say focus on the liquidity, because look at the trading volume in the 24-hour span that is moving these projects, like $92,000, 120K. Like, that's pretty much nothing in terms of trading volume. But regardless, there hasn't been a massive amount of movement around this space in just the last couple days, and it's because we have been ranging, waiting for Bitcoin to do something. Now, as I've said, Monday open, what are we watching? We're watching the DXY. We're watching the 10-year. We're also watching the S&P, the NASDAQ, because these are the key things to really kind of focus on right now. Now, in terms of the US dollar, we're still ranging. We're still waiting to see something happen here. We did still reject off of that upper trend line, but now we're watching for the next big move. What is going to be the move? Is it going to be a stale, downtrend that starts where we're just kind of ranging sideways, which I've already outlined on this chart? It looks possible, but we need to be careful and we need to be cautious, because if this does start to break above this upper trend line, it's not bullish for Bitcoin. It's not bullish for risk on assets. Now, outside of the DXY, like I said, the 10-year, the US 10-year is a chart that gets so overlooked in this space. I said, so has everyone just forgotten about the US 10-year chart, currently rejecting the upper trend line going back to October. Last time we did this, the market went full send mode. Very simple understanding of why this chart matters. The US 10-year pumping, risk on assets become less attractive. If it's dumping, then they become more attractive. And this was the chart at that time. It was about roughly April 29th, 2024 at 5:32 a.m. It is now currently, at the time that I'm recording this, about roughly 11 p.m. today. And this is what the chart looks like. Again, this is starting to bleed out more and more. Now, are we going to have a significant bounce off of this level back here from October that we did get a significant bounce off of, which would be right around roughly 4.553%? Or are we going to continue to trail down to the downside and possibly back test this lower trend line? That's what we're watching for. That's what we're waiting to see. Now, this could take some time, right? Roughly June. The middle of June would be the focus point for this to have a clear decision made in terms of us breaking out of this wedge or breaking down. But I do think that while this is waiting to do something, it's going to continue to chop sideways and back test this lower trend line. That is actually very bullish for risk on assets, because this is still in a downtrend formation. Now, if this does start to break out of that upper trend line, then the warning sign is there. But outside of that, this chart has been fairly bearish, and we are still at those oversold overbought levels on the RSI. I wouldn't be concerned on this chart until we're at the oversold areas going back to December of 2023. Now, outside of this, yes, the S&P 500 and the NASDAQ, both of these, in terms of bullish momentum, it seems as though the S&P is starting to gain some momentum on the MACD, if you do follow the MACD, but also the RSI. Guys, the level that we recently just tapped is the same level that we tapped back in October, and also even around September. It ranged a little bit longer into October, but for the most part, look at what ended up happening. after we had that bottom back in October. Look at the RSI, also look at the MACD. It was starting to flip bullish in terms of momentum, and look at where we're at right now. Now, the big thing to focus on in terms of the S&P 500 is flipping 5178, because if we do flip that, then we will get another retest of that high up here at about roughly almost 5300. Now, if we do break that high, specifically this high up here, then we are going to go significantly higher, and that will be enough to really kind of push markets into bullish territory yet again and cause a major impulse across the board. Now, also the NASDAQ, right? Everyone has been focused on the NASDAQ. RSI, very similar, going all the way back to October. Also, MACD is starting to gain some bullish momentum. It does, chop a little bit, but for the most part, once we flip this 18,051 level, it's game on to target those highs yet again, very similar to this S&P 500. Now, what are some signs that Bitcoin is going to go much higher? Well, let's focus on them. So there's a recent post by Carl B. Mender over on X, and we have breaking: Russia prepares for total Bitcoin ban as geopolitical tensions rise. Digital rubles will be allowed. The need for a ban is due to the fact that Bitcoin is a currency that replaces the ruble in the country. Now, I found this very interesting, but guess what? If you were around in the previous years during the, bull and bear cycles, we always hear something like this in terms of the narrative. Back in 2020 into 2021, the narrative was China was banning Bitcoin and Bitcoin mining. We heard it every single other day. Then it was India was banning Bitcoin mining and banning Bitcoin. It is nonsense. It's a thing that always happens in a bull cycle. I believe back in 2017, we had something very similar to it as well. And even today, now it's, oh, the regulators are going to do this, regulators are going to do that. And now it's Russia total banning Bitcoin and Bitcoin mining. Like, it is ridiculous. Guys, this narrative, in my opinion, only supports the thesis that Bitcoin is going to go much higher, and also the market is ready to go much higher. The last couple days, the last week or so, has been so bearish. Technically, you have the bank implosion, right? You have Russia now banning Bitcoin. On top of that, you have the FBI saying, hey, don't utilize any, payment platform, or it was something like odd that, doesn't have KYC. It was like a payment messaging service or something like that. It was ridiculous. But also on top of that, you had the SEC going after Ethereum. You had the SEC also going after MetaMask. I mean, you can't make this stuff up. It's like peak bearish moments like that really kind of look at, all right, where are we at right now cycle-wise? Where are we at right now on the chart? And it only supports the thesis that we are going to go much higher. Now, outside of this post, ETFs in Hong Kong. This is the big thing to focus on. The Hong Kong-based Bitcoin ETFs are going live tomorrow, aka today. They are already live as of the time that I'm recording this, and issuers believe their first day will be larger than the US launch, predicting over 125 million on day one. This is going to be the biggest flop to date. Nearly all ETFs are experiencing historical outflows right now, and Tether is at capacity for its manipulation scheme. The house of cards is about to collapse, and reality will soon set in that there are no magical institutions to come save everyone by buying their bags at high prices. Now, again, this is an account that is peak bearish all the time. Let's talk about why this isn't going to be the biggest flop, and why I believe that this Hong Kong-based Bitcoin ETF news could definitely be something very big to focus on. Over here, we have breaking: Hong Kong Bitcoin ETF launches tomorrow. And here's a little secret from this part of the world. The Asian market in user count is bigger than the US and European markets combined. Here you have a 2022 Huobi report. Number of cryptocurrency users in different regions in millions. And if we look at Asia, guys, it's well over 120 plus million users. Just to put that into perspective, North America has sub 60 million. It's like right around 50 million users. Think about how crazy that is. In fact, Asia almost makes up all of the users when you combine Africa, Europe, South America, and even North America as well. That's how massive Asia actually is in terms of their user base. But beyond that, all right, let's talk about Bitcoin. Let's talk about how these ETFs right now are affecting Bitcoin. Right now, this is what the Bitcoin chart looks like. First off, we got the launch of the Hong Kong ETFs right at resistance on this chart. Now, I did make a post and I did include it in a video from yesterday, right? I was talking about this. I said 62K. All right. This was the post from yesterday. I said, until Bitcoin breaks over 67K, we are still just ranging here. We haven't made a higher high since we pumped to 73K, and it's crucial to focus on at this moment. Local bottom would be invalidated if we lose 62K. Pay attention to Monday's open. Now, here we have 62K as held. We wicked to 61.8K, but candle bodies are important. Today's close is looking like 64K plus, which is a great sign. As I have stated since the bank collapse on Friday, I personally see the 62K zone being our local bottom. Now, the key thing for us is to create a higher high, aka 67K plus, for us to target 74K next. Now, before we get ahead of ourselves, before we get excited about, oh, hey, the bottom's in, let's look at Bitcoin. So, first and foremost, new daily candle. This is the currently daily candle. Our daily candle close was at 63.8K. So it's almost at $64,000. Now, where we closed at is actually trying to flip support going back to March 22nd and also 23rd and even the 24th. That's support from that time. It's also support from March 5th and also March 6th. And it was recent support on April 13th and the 14th before we ultimately lost it on the 15th, which caused us to go all the way down to 59K. It's like 59.6K. But since then, we have been fighting this level, right? And it's resistance now. It's support that has been flipped into resistance. It's very similar to this level up here, right? That we have been trying to break. Now, we wicked a little bit higher. In fact, it was like right around 64.7K. We tried to attempt a break above this level, but we failed, right? We rejected. Now, our major rejection is actually going to happen down here at 63.8K if we get it. Now, what would that look like? Well, it would be us actually rejecting down back to this level down here at about roughly $62,000. Now, the moment of truth on Bitcoin is us actually ranging down to those levels, so something like this, right? And then ultimately having an impulsive move above all these levels, specifically breaking over the trend line, breaking over that resistance zone that we just retested, and then ultimately the moment of truth, the major moment of truth is breaking over $67,000. That will take us to this upper level up here at about roughly 70.6K to $73,000. And the big moment of truth is us actually breaking over 74K. But until, right, the big word here is until we break over this high here, Bitcoin is technically still bearish. Even with the ETFs, even with anything else, there is nothing telling us that this structure is not bearish currently. Until we reclaim this high and we break over it at 67 point almost 5K, Bitcoin is technically still bearish. Now, if we do get something like this where we backtest this level down here and then we get the big impulsive move, breaking over this trend line will be the big moment where we look at Bitcoin and we say, all right, this could very well be it. Once we get a break over that trend line, watch Bitcoin closely, because that will be the time where we either break to $74,000 to $80,000 plus, or we reject heavily and we lose these lower levels. So far, and I will say so far, the good news is that on this chart, if we look at the daily closes here, so sorry, let me move that. If we look at the daily candle closes, this is what this chart looks like. So let me actually just get rid of that. Let's go to the horizontal line. So this was our previous lows, because again, candle bodies are crucial. It's not about candle wicks here. Our recent close back in the middle of April was 61.3K. Okay, this is where we closed on. That is our first low, 61.2K. Our candle body close recently was this level here at 63,100. So far on this chart, what we have is a low followed by a higher low. Again, the thing to focus on is us getting a break, maintaining structure. So having another low or a higher low here would be somewhere up here within roughly the 64K, like 64.7K to almost like $66,000. Okay. From there, we need to make a higher high. So if we do have a range here and we break to the upside and maybe we reject around like 67K, right? And we back test this level here and we range sideways, what we want to see from that range here is a big break to the upside. That way we can break over that high, make a higher high, have a higher low. This is bullish structure. Right now, we don't have that yet. Yeah, we might have a higher low here, but we don't have a higher high. Until we get a higher high, the big question is, are we about to have a complete nuke of this chart where we just completely reject and we go back down into this demand zone down here, which is still a possibility. I'm going to say that again. That is still a possibility. Until we make a higher high and until we break over 74K, we could still very well see this demand zone down here. It's not out of the question. But so far, the good news, right? The thing that I'm really kind of focused on is the fact that the bottom trend line has held. This was a perfect tap of that bottom trend line that we got at about roughly 61.8K. We had a significant bounce, right? Back up to like 64.7K, but we're still ranging. And the decision, it's coming down to the wire. We will get a decision here soon where it's either up or it's down. You need to be prepared for either scenario. Now, I see a lot of people trying to say, oh, well, the market's topped out. The market's done. This is like a 5 wave into a much larger correction down to like sub 10K. Like I've been seeing ridiculous calls all over X in the last couple of days. In my opinion, like I've said multiple times, there's no reason to be very bearish right now. There's no reason to overreact right now. The big overreaction will technically be us losing this like $50,000 level, which we are not there yet. And I know that that might sound crazy, but I'm not going to panic at all, at least until we lose this bottom level here. Like this is still a possibility that we get a big bounce down here, but I'm not going to be focused on that just yet until we lose this bottom trend line. And also we get a close below 61.2K. But until then, I'm still watching this closely. It is technically in a bearish formation until we make a higher high, but so far we have just been ranging. Now, do I think that these ETFs will help? Sure, I do think that they could, but the question is, do they, right? Because ETFs are not extremely bullish to the point where like, all right, yeah, we're ready to go to $100,000, which most people are trying to, talk about. It's just more volume, right? And it could be, positive or even negative trading volume. Now, so far, there has been a lot of negative trading volume around the ETFs, at least in the US. So let's see what Hong Kong can do. Let's watch over the next couple of days, because remember, this is still a big week. We still have a lot of major financial events happening this week that could very well affect this chart greatly. But the big things to really watch for right now, and the moment of truth, is really kind of the US 10-year really breaking down in a big way. I'm watching this chart more than just Bitcoin. And outside of this, I'm also watching the DXY closely. These two charts technically are more important right now than just what Bitcoin is doing, because until then, right, like Bitcoin is still just ranging. I'm still watching these closely. Now, outside of that, if you wanted to focus on altcoins, Bitcoin dominance is your friend. And so far, Bitcoin dominance has been increasing in percentage. I think it's like at 54% the last time that I checked. Which does help the idea that, hey, Bitcoin is starting to gain some momentum over the market. More money's flowing into Bitcoin right now than altcoins, and it's supporting a move to the upside. So let's see what happens over the course of the next couple of days. In my opinion, I do believe that Bitcoin is ready to move to the upside, but we still can't get ahead of ourselves. We can't get too excited. We still need to focus on what matters, which is creating that higher high. So until then, it's just ranging, and I know that that sucks, but it is what it is. So with that being said, I hope you guys enjoyed this video. If you guys do, definitely leave a like, subscribe to notifications on if you guys want more free content. You guys want to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.